Have you ever received a phone call that just didn't feel right? Maybe someone claiming to be from your bank, or a company offering you a limited-time investment opportunity. Or maybe you've seen those emails that say, "Congratulations, you've won a prize," but deep down, you knew something wasn't quite right. If any of this sounds familiar, you're not alone. Financial scams are everywhere these days. And unfortunately, scammers often target people over 60 because they assume we have retirement savings, pensions, or home equity. They think we're easy prey. But let me tell you something, they're wrong. Because today, we're going to talk about 5 smart ways to protect your money. Avoid scams and make sure that your financial future stays exactly where it belongs, in your hands. Before we dive in, I want you to know that protecting your money isn't just about avoiding scams. It's about making smart decisions so that you can live comfortably, enjoy your retirement, and never have to worry about financial stress. So let's start with one of the biggest mistakes people make that can cost them their independence and security. One of the most common ways people lose money after 60 isn't through some complicated scam. It's by trusting the wrong people. Now, that doesn't mean you shouldn't trust anyone, but it does mean you need to be careful about who has access to your finances. Too often, seniors fall victim to what's called friendly fraud, where family members, caregivers, or even close friends take advantage of them. It usually starts small. Maybe someone borrows a little money and promises to pay it back but never does. Or they ask for help with bills and suddenly, they're relying on you more and more. The problem is, when you give someone access to your accounts, even if it's someone you love, you lose control. And sadly, financial abuse by family members is more common than most people think. So how do you protect yourself? First, always keep your bank accounts and credit cards in your name. If someone needs financial help, it's better to offer guidance rather than direct access to your funds. And if you do need to share control for any reason, work with a trusted attorney to set up legal safeguards like a power of attorney with clear limitations. That way, you stay in control while also making sure your finances are managed properly. Another big mistake that can cost you money is falling for high-pressure sales tactics. Have you ever been on the phone with someone who just wouldn't take no for an answer? Or maybe a salesperson knocked on your door, promising some exclusive deal that was only available today. These tactics are designed to rush you into making a decision before you have time to think. Scammers know that when people feel pressured, they're more likely to say yes, just to get rid of the discomfort. Here's the rule to remember. If anyone tries to rush you into a financial decision, walk away. Legitimate businesses will always give you time to read the details. Ask questions and think things over, whether it's a new insurance policy, an investment opportunity, or even a simple home repair. Always take your time. If someone refuses to let you think about it, that's your sign to say no, thanks, and if you ever feel unsure about a deal, talk to a financial advisor or a trusted friend before making any commitments. Now let's talk about another hidden danger that many people don't think about: online scams. You might not be someone who spends hours on the internet, but even checking emails or browsing social media can put you at risk if you don't know what to watch for. One of the biggest scams right now is phishing. Those emails or text messages that look like they're from your bank, a government agency, or a well-known company. They'll tell you there's a problem with your account and ask you to click a link or provide personal information. But the moment you do, scammers can steal your identity, drain your accounts, or even take out loans in your name. So how do you protect yourself? First, never click on links in emails or texts that ask for personal information. If you get a message claiming to be from your bank, call your bank directly using the number on your statement, not the number in the message. Second, make sure your passwords are strong and unique for each account. And finally, if something seems too good to be true, like an email saying you've won a free vacation, trust your instincts. If you didn't enter a contest, you didn't win one. Financial security isn't just about avoiding scams. It's about staying informed, making smart choices, and protecting what you've worked so hard for. And the good news is, once you know what to watch for, it's much easier to keep your money safe. When it comes to protecting your money, knowledge is your best defense. We've already talked about the dangers of trusting the wrong people, high-pressure sales tactics, and online scams. But those are just a few of the ways that people over 60 can lose their hard-earned savings. Now let's talk about some of the more subtle threats, things that might seem harmless at first, but can quietly drain your financial security over time. One of the biggest traps people fall into is signing up for unnecessary subscriptions and services. Think about it. How many times have you been offered a free trial for something, only to realize months later that money is still coming out of your account. These days, everything from magazines to streaming services to medical alert systems comes with an automatic renewal. And companies count on the fact that many people will forget to cancel. It might not seem like a big deal at first, $10 here, $20 there, but over time, these little charges add up. Before you know it, you're spending hundreds of dollars a year on things you don't even use. That's why it's so important to check your bank and credit card statements regularly. Look for any charges you don't recognize and ask yourself, do I really need this service? If the answer is no, cancel it right away. And if you ever sign up for a free trial, set a reminder in your calendar to cancel before you're charged. Another silent money drainer is hidden fees. You know the ones: bank fees, late fees, maintenance fees, even fees for paper statements. Banks and credit card companies are especially good at sneaking in extra charges, hoping you won't notice. But here's the good news. Many of these fees can be avoided if you know what to ask for. For example, did you know that many banks will waive monthly fees if you set up direct deposit or maintain a minimum balance? Or that you can often negotiate late fees if you call and ask. It's all about being proactive. If you see a fee on your statement, don't just accept it. Call the company and ask if it can be removed. And if your bank or credit card is charging too many fees, consider switching to a better option. Many credit unions and online banks offer free accounts with no hidden costs. Now let's talk about something that affects almost everyone at some point: medical expenses. As we get older, healthcare becomes one of the biggest expenses we face. And while some costs are unavoidable, many people end up paying more than they need to simply because they don't know their options. One of the most common mistakes is not reviewing your insurance coverage regularly. Whether you're on Medicare, private insurance, or a supplemental plan, your benefits can change from year to year. A medication that was covered last year might not be covered this. Under your current plan, and if you're not paying attention, you could end up paying out of pocket for something that should be covered. That's why it's so important to review your plan every year during the open enrollment period. Call your provider, ask about any changes, and compare options to make sure you're not overpaying for coverage you don't need, or missing out on benefits that could save you money. Another area where people lose money is prescription medications. Drug prices can vary significantly depending on where you buy them, and whether you use insurance or pay cash. Many people assume that using insurance always gets them the best price, but that's not always the case. In some situations, the cash price at a discount pharmacy or a generic alternative could be much cheaper than your insurance copay. Websites and apps like GoodRx can help you compare prices and find discounts on prescriptions, so you never pay more than you have to. And speaking of unnecessary expenses, let's talk about warranties and insurance policies. Companies love to sell extended warranties on everything from appliances to electronics to cars, promising that you'll be protected if something goes wrong. But in many cases, these warranties are just a way to get more money out of you. Most products either come with a manufacturer's warranty or are unlikely to break within the covered period. Instead of spending extra on extended coverage, consider setting aside a small emergency fund specifically for repairs or replacements. That way, you're in control of your money, instead of paying for something you might never use. The same goes for certain types of insurance. While some policies, like health, home, and auto insurance, are essential, others might not be necessary. For example, life insurance can be important for younger people with dependents. But if your kids are grown and financially independent, you might not need as much coverage anymore. Reviewing your policies regularly can help you cut out unnecessary expenses and keep more money in your pocket. And finally, let's talk about one of the biggest financial pitfalls: helping others at your own expense. This is a tough one because we all want to support our loved ones. Maybe your adult child is struggling financially, or a friend asks for a loan. While it's natural to want to help, it's important to set boundaries. If giving someone money puts your own financial security at risk, it's okay to say no. Instead of offering cash, consider helping in other ways, like sharing financial advice, helping them find resources, or offering non-monetary support. Remember, your financial well-being matters. You've worked hard for your money, and you deserve to enjoy it. Making smart decisions and avoiding unnecessary expenses can help you stay independent, stress-free, and financially secure for years to come. Now, let's talk about one of the most dangerous financial traps that many people fall into: investment scams and fraudulent schemes. These scams are becoming more sophisticated every day. And unfortunately, seniors are often targeted the most. You've probably seen those too-good-to-be-true investment opportunities, promising huge returns with little to no risk. Maybe it's a phone call, an email, or even a friendly-sounding person who reaches out on social media. They might claim they have an exclusive offer just for you. But here's the truth. If an investment sounds too good to be true, it almost always is. One of the biggest red flags to watch for is pressure to act quickly. Scammers don't want you to think things through or do your own research. So they'll say things like, "This deal won't last long," or "You need to act now before you miss out." Real investment opportunities don't work that way. A legitimate financial advisor will always give you time to consider your options and never pressure you into making a quick decision. Another warning sign is when someone asks you to send money in an unusual way, like through gift cards, wire transfers, or cryptocurrency. Scammers love these methods because they're hard to trace and nearly impossible to get back once the money is gone. If anyone ever asks you to send money this way, stop immediately and talk to someone you trust. Ponzi schemes are another common trap. These scams promise high returns, but instead of actually investing your money, they use funds from new investors to pay earlier ones. Eventually, the scheme collapses, and the last group of investors loses everything. If someone is promising consistent, high returns with little to no risk, be extremely cautious. Real investments fluctuate, and no legitimate financial advisor can guarantee huge profits without risk. So how can you protect yourself? First, always verify who you're dealing with. If someone claims to be a financial advisor, check their credentials, look them up online, see if they're registered with financial authorities, and don't just take their word for it. A quick search can often reveal whether someone has been involved in scams before. Second, never invest in anything you don't fully understand. If you're being pitched a complex investment that sounds confusing or doesn't make sense, walk away. Legitimate professionals will take the time to explain things in simple terms and answer all your questions. And finally, always get a second opinion. If you're considering an investment, talk to a trusted financial advisor, a lawyer, or even a family member before making a decision. Scammers rely on isolation. They don't want you discussing their scheme with others because they know someone might spot the fraud. A second set of eyes can help you avoid a costly mistake. The key takeaway here is that you've worked too hard to build your financial security to let someone take it away with an empty promise. Stay alert, trust your instincts, and never be afraid to walk away if something doesn't feel right. Your financial future is too important to risk on a gamble. Let's talk about another major mistake that can put your financial security at risk: sharing too much personal information, especially online or over the phone. Scammers are constantly looking for ways to steal identities, gain access to bank accounts, and trick people into revealing sensitive details. And unfortunately, seniors are often their primary target because they tend to be more trusting and less familiar with digital scams. You might receive a phone call from someone claiming to be from your bank, Medicare, or even the IRS. They might say there's an issue with your account, and they need to verify your identity. Then they'll ask for things like your social security number, bank account details, or passwords. But here's the truth. Legitimate companies will never call and ask for that kind of information. If you ever get a call like this, hang up immediately and contact the company directly using the official phone number on their website or your bank statement. Email scams are another big threat. Have you ever received an email that looks like it's from your bank, PayPal, or another trusted company, asking you to click a link to verify your account? These emails often look real, complete with official logos and urgent messages like, "Your account has been compromised." But clicking those links can lead to fake websites designed to steal your login details. Always be cautious. Never click on links from emails unless you are 100% sure they're legitimate. Instead, go directly to the website by typing the address into your browser. Social media can also be a dangerous place when it comes to protecting your personal information. Scammers often create fake profiles pretending to be long-lost relatives, old friends, or even potential romantic partners. They'll start friendly conversations, slowly gain your trust, and then ask for money, gift cards, or personal details they can use for fraud. If someone you don't know well is suddenly asking for financial help, be very skeptical, even if they seem genuine. Take a step back and do some research before responding. So how can you protect yourself? First, always be cautious about who you share personal details with. Never give out your social security number, bank account information, or passwords over the phone or online, unless you are absolutely certain the request is legitimate. Second, use strong passwords and never reuse the same one for multiple accounts. A good password should be long, include a mix of letters, numbers, and symbols, and be something only you would know. If you have trouble remembering them, consider using a password manager to keep them safe. And third, be wary of unsolicited requests, whether they come through email, phone calls, or social media. If someone contacts you out of the blue and asks for money or personal information, take a step back and verify their identity before doing anything. It's always better to be safe than sorry. The bottom line is that your personal information is just as valuable as your money, because once a scammer gets their hands on it, they can do serious damage. Stay alert, trust your instincts, and remember that protecting your identity is a key part of keeping your financial future secure. Let's move on to another costly mistake that could put your financial security at risk: failing to regularly review your financial statements and credit reports. Many people assume that if nothing seems wrong, their accounts are fine. But here's the problem: fraud and errors often go unnoticed until it's too late. Scammers are clever, and sometimes they start by making small, unauthorized charges to see if anyone notices. If those charges go undetected, they may attempt larger transactions, drain your bank account, or even open credit cards in your name. That's why it's essential to check your bank and credit card statements at least once a month. Look for any transactions you don't recognize, even small ones. If you see anything suspicious, report it immediately to your bank or credit card company. Most financial institutions have fraud protection services, but they work best when fraud is caught early. Another key step in protecting yourself is reviewing your credit report. You might think, I'm not planning to take out any loans or new credit cards, so why does this matter? Well, even if you don't need new credit, scammers might try to use your information to open accounts in your name. Checking your credit report regularly allows you to spot any unauthorized activity before it becomes a bigger problem. You're entitled to a free credit report from each of the major credit bureaus, Experian, Equifax, and TransUnion, every year. That means you can check one report every 4 months, completely free of charge. If you find accounts you didn't open or see incorrect information, report it right away and dispute the errors. Another good habit is setting up fraud alerts or account notifications. Many banks allow you to receive text or email alerts for unusual transactions, large withdrawals, or even just when your balance falls below a certain amount. These alerts can help you catch fraud before it gets out of hand. Now let's talk about a mistake that's surprisingly common: keeping too much money in one place. Many retirees keep all their savings in a single bank account, thinking it's easier to manage, but this can actually be risky. If a scammer gains access to your account, or if there's a bank error, you could lose access to all your funds at once. A smarter strategy is to spread your money across different accounts. Keep your everyday spending money in a checking account, your emergency savings in a high-yield savings account, and if possible, some investments that provide long-term growth. This way, even if one account is compromised, the rest of your money remains safe. And speaking of safety, make sure you're keeping your important financial documents secure. Many people still keep checkbooks, bank statements, and even social security cards in easily accessible places. But if someone gains access to these documents, they could steal your identity without you even realizing it. Store sensitive paperwork in a locked drawer, a safe, or even a safety deposit box at your bank. The truth is, financial security isn't just about how much money you have. It's about how well you protect it. By regularly checking your statements, monitoring your credit, diversifying where you keep your money, and securing your important documents, you can prevent costly mistakes and keep your finances safe for years to come. Another major mistake that can put your financial security at risk is trusting the wrong people with your money. As we age, we tend to rely more on family, caregivers, or financial advisors for help with managing our finances. While many of these people have good intentions, unfortunately, financial abuse is more common than most people realize. Sometimes the warning signs are subtle: a family member who asks for a small loan and never repays it, a caregiver who starts making purchases on your credit card without your permission, a financial advisor who pressures you into investments that don't feel right. The hardest part? The people who take advantage of seniors are often those they trust the most. That's why it's essential to stay actively involved in your finances. No matter how much you trust someone, if you need help managing your money, make sure you're working with a reputable financial planner, one who is certified has good reviews, and doesn't pressure you into making quick decisions. If a family member or caregiver offers to help with bills, set clear boundaries and keep track of every transaction. You should always have full visibility into your own accounts. Another way to protect yourself is to set up financial safeguards. Consider adding a trusted friend or relative as a cosigner, or having a financial power of attorney in place. But make sure it's someone you absolutely trust. And remember, you should never feel pressured to sign over control of your finances to anyone. If someone is rushing you to make a financial decision, that's a red flag. Another mistake seniors often make is not updating their legal documents. Your financial situation changes over time, and so should your estate plan. If your will, trust, or power of attorney documents are outdated, they may not reflect your current wishes. This can create problems down the line, especially if you become unable to make financial decisions for yourself. If you haven't updated your will or trust in several years, take some time to review it. Are your beneficiaries still correct? Have there been any changes in your assets? Do you have a trusted person in place who can manage your affairs if needed? These details might seem small now, but they make a big difference in ensuring your money goes where you want it to go. And let's not forget about digital security. Many people think that financial scams only happen through phone calls or emails, but online fraud is on the rise. If you use online banking, make sure you're using strong passwords and enabling two-factor authentication. Avoid using public Wi-Fi when logging into your accounts, and be cautious about emails asking for personal information. Scammers are getting more sophisticated every day. You might receive an email that looks like it's from your bank, but it's actually a scam trying to steal your login details. If you ever receive an unexpected message asking you to update your password or verify your account, don't click on the link. Instead, go directly to the bank's website or call their official customer service number. The key to financial security isn't just about having money, it's about keeping it safe. By staying involved in your finances, setting up safeguards, updating your legal documents, and protecting yourself online, you can avoid these costly mistakes and enjoy your retirement with confidence. One of the biggest financial mistakes seniors make is not having a solid plan for long-term care. It's easy to assume that Medicare or other health insurance will cover everything, but the reality is that long-term care, like assisted living, in-home care, or nursing home stays, can be extremely expensive and often isn't covered the way people expect. Many seniors put off thinking about this until they actually need care, but by then, the costs can be overwhelming. The truth is, planning ahead can make all the difference. Have you considered how you would pay for extended care if you ever needed it? If not, now is the time to start looking at your options. Long-term care insurance is one possibility, but it's important to get it early before health issues make it too expensive or impossible to qualify for. Another option is setting aside a portion of your savings, specifically for future care. Some people even explore hybrid insurance policies that combine life insurance with long-term care benefits. The key is to look at your financial situation now and prepare, rather than waiting until you're in a crisis. Another mistake that can cost you a lot is failing to adjust your budget for retirement. Many people assume their expenses will go down after they stop working, but that's not always the case. In fact, some costs like healthcare can actually increase. If you're still spending money the same way you did in your working years, without adjusting for changes in income, you might find yourself running out of savings faster than expected. One of the smartest things you can do is regularly review your budget. Look at your biggest expenses and see if there are areas where you can cut back without sacrificing your quality of life. Are there unnecessary subscriptions or memberships draining your money? Can you downsize to a smaller home with lower maintenance costs? Even small adjustments can add up over time. Many seniors also overlook the impact of inflation. The cost of living keeps going up, which means the money you've saved might not stretch as far as you thought. If you're relying on a fixed income, this can be a real problem. That's why it's so important to have a diversified financial plan, one that includes investments or income sources that can help keep up with inflation. Speaking of investments, another mistake that can be costly is being too conservative or too risky with your money. Some seniors are so afraid of losing money that they avoid investing altogether, keeping everything in savings accounts that barely earn interest. While being cautious is smart, keeping all your money in low-interest accounts can actually cause you to lose purchasing power over time due to inflation. On the other hand, some retirees fall for high-risk investments that promise big returns, but come with high potential for loss. Scammers often target seniors with too good to be true investment opportunities, and even legitimate investments can be risky if they're not suited for your needs. The best approach is to have a well-balanced portfolio, one that protects your money while still allowing it to grow enough to keep up with your expenses. If you're unsure, working with a trusted financial advisor can help you make smart decisions. The key takeaway: financial security isn't just about how much you have, it's about how well you manage it. Avoiding these costly mistakes, planning ahead for long-term care, keeping a smart budget, and making informed investment choices can help ensure that your retirement years are truly golden. Another mistake that can quietly drain your finances is not having a proper estate plan in place. Many people assume that having a will is enough, but estate planning is much more than that. It's about making sure your assets are distributed the way you want, minimizing taxes and legal fees, and making things easier for your loved ones when you're gone. Without a clear estate plan, your family could end up facing a long, expensive probate process, and your money might not go where you intended. That's why it's so important to have a will. Yes, but also to consider setting up a trust, assigning beneficiaries on your financial accounts, and designating someone you trust with power of attorney in case you become unable to make financial or medical decisions for yourself. Another issue seniors often overlook is failing to regularly update their estate plans. Life changes, maybe you've sold property, lost a loved one, or have new grandchildren you want to include. If you haven't reviewed your estate plan in a few years, now is the time to make sure it still reflects your wishes. Aside from estate planning, another financial pitfall is loaning or gifting too much money to family and friends without clear boundaries. It's natural to want to help loved ones, especially if they're struggling, but constantly giving away money, whether through large gifts or co-signing loans, can put your own financial stability at risk. Seniors are often targeted by family members, even well-meaning ones, who ask for financial help without realizing the long-term consequences. If you're living on a fixed income, every dollar counts. It's okay to say no or set limits. One way to handle this is by establishing a personal policy. Maybe you decide you'll only give financial help on birthdays or holidays, or that you'll only give amounts that won't impact your own security. Another way to protect yourself is to never co-sign loans for anyone unless you're absolutely certain they can repay. When you co-sign, you become legally responsible for that debt if they fail to pay. This can be a major financial burden, and unfortunately, many seniors have lost large portions of their savings because of it. Finally, let's talk about one of the most overlooked financial mistakes: neglecting to take advantage of senior discounts and benefits. You might be surprised by how many resources are available to help seniors save money. From discounted property taxes and utility assistance programs to reduced travel and entertainment costs. Some discounts require a little effort, like signing up for senior discount programs at grocery stores or asking about special rates at restaurants and retail stores. Others are built into government programs you may not even be aware of. Many seniors miss out on benefits like food assistance, home energy savings programs, or healthcare subsidies simply because they never check what they qualify for. Taking the time to research these opportunities can put more money back in your pocket and help stretch your savings. Even small savings here and there can add up over time, giving you more financial flexibility to enjoy your retirement without stress. When you take control of your finances by planning for the future, avoiding common money traps, and making smart decisions, you're not just protecting your wealth, you're protecting your independence and peace of mind. Retirement should be a time of enjoyment, not worry. Making small changes today can make a big difference in your financial security for years to come. That brings us to the final, and perhaps most important, financial habit that can make all the difference: staying informed and proactive about your money. Too many seniors take a hands-off approach to their finances, assuming that once they retire, their money will take care of itself. But the truth is, financial security requires ongoing attention. One of the biggest mistakes people make is not reviewing their bank and credit card statements regularly. Scammers and even legitimate companies often rely on small, unnoticed charges to drain your money over time. Subscription services, hidden fees, or unauthorized transactions can slowly chip away at your savings. Make it a habit to check your statements at least once a month, and if you notice anything suspicious, address it immediately. Another key habit is keeping up with basic financial literacy. The world of money is always changing. New scams emerge, Investment opportunities shift, and government programs update their rules. If you don't stay informed, you could miss out on benefits or, worse, fall into a financial trap. You don't need to become an expert, but reading articles, watching videos, or even attending local workshops for seniors can help you make better financial decisions. It's also important to be careful about financial advice, especially from people who don't have your best interests at heart. Many seniors fall victim to bad investment schemes because they trust the wrong people. Be skeptical of anyone who promises, guaranteed, high returns or pressures you into making quick decisions. A good financial decision is never rushed. And finally, don't be afraid to ask for help when you need it. Whether it's consulting a trusted financial advisor, seeking advice from a knowledgeable friend, or reaching out to a senior assistance program, there's no shame in getting guidance. The more informed you are, the more confident and secure you'll feel about your financial future. By taking these steps, protecting yourself from scams, planning your estate, setting boundaries with money, and staying informed, you can enjoy your retirement years with confidence and security. Financial independence isn't just about how much money you have. It's about making smart choices to ensure that your money works for you. So take charge, stay aware, and remember, your financial well-being is in your hands. With the right habits and mindset, you can enjoy your golden years with peace of mind, knowing that you're in control of your future. That wraps up everything you need to know to protect your money and avoid scams after 60. The key takeaway: financial security isn't just about having savings, it's about making smart decisions, staying informed, and being proactive in protecting yourself. Now, before you go, I want to remind you that small changes can make a big difference. Whether it's reviewing your bank statements more often, learning to recognize scams, or setting clear financial boundaries with loved ones, every step you take strengthens your financial independence. If you found this video helpful, let me know in the comments. Have you ever encountered a scam? What strategies do you use to protect your money? Your experience could help someone else in this community. And if you haven't already, be sure to like this video and subscribe to the channel for more content like this. We're here to help you navigate life after 60 with confidence, whether it's your finances, health, or overall well-being. Thank you for watching, and remember, your money is yours to protect. And with the right mindset, you can enjoy your retirement years with security and peace of mind. Take care, and I'll see you in the next video.